Good afternoon, everybody, and welcome to the SPAC conference. I call it more of a reunion. We get to see one another. I'm going to take a minute and give to the panel so everybody can introduce themselves. I'll start first. My name is Drew Bernstein. I'm co-managing partner and co-founder of Markham Asia. We work with Asian companies that go public in the U.S. I think this should be a particularly interesting panel because I believe over the next 10 years that a majority of especially the industry disruptive unicorns will be coming from Asia, not the West. And in my business, which is purely Asia-focused, 5 years ago, about 95% of my business came from China. And today, that number is about 50%. And the other 50% is coming from places like Singapore, Malaysia, Indonesia, Vietnam, and more recently, Japan. We hosted a conference in Japan about a week ago with NASDAQ, and we had almost 400 attendees there. So with that, let's start with my guests, and let's just each take a minute and just introduce yourselves, and then we can get into the topic. Go ahead.
David Lazar. I'm an activist investor. Unfortunately, Avram couldn't make it, so I'm here in his place. He sends everyone his best regards and wishes everyone continued success. And of course, our thoughts and prayers are with him and his family in Israel.
Hi, I'm Katrina Nachi. I'm a US CPA based in Frankfurt, Germany for the past 12 years. I help European finance teams get ready to bring in US stakeholders, either fundraise with private equity, de-SPAC, regular IPOs, or acquisitions.
Hello, my name is Natalie Verbanek. I'm a managing director, audit partner at CBIZ. I work in the capital markets practice, focusing on SPACs, reverse mergers, IPOs, business combinations. And CBIZ is a professional service firm that performs audits, tax, consulting, insurance, and benefits.
Hi everyone, my name is Cynthia Ananda-Jayasekharam. I'm a partner in the Cayman Islands corporate team at Ogier. We specialize in all things corporate, M&A, capital markets related, and obviously SPACs. Ogier as a firm is one of the largest offshore global law firms in the world. We saw some spectacular statistics about the number of IPOs that have closed this year, and as a team we've done over a third of them. So very active in this space and happy to be here.
Thank you, everyone. To begin with, I'd like to start, the SPAC market is starting to come back. So I'd like to start with what we're seeing in global trends and the structuring of it. So from a global perspective, what are we seeing right now? Maybe we'll start with you, Natalie.
Sure, Drew. Thanks for picking on me.
I'm only picking on you because I know you so well.
I know, thank
Okay?
you. What we're seeing is that there are a lot of more foreign private issuers in the space. And with the foreign private issuers comes a lot of complexities that sponsors and management teams have to consider. It starts from the legal aspect, which she can speak about, and also the accounting and the regulatory compliance and the nuances that are involved in a foreign private issuer that is very different than a domestic issuer.
Cynthia from Germany, what do we see from there?
I actually work all across Europe. Most of my clients are in the UK. That's where I see the most active market going into the US. I'm typically working with companies a little bit earlier stage where they're even just bringing in Series B investment and getting ready to do a SPAC or other exit in a few years. So I think that there's some interesting things coming down the pipeline from that perspective also.
Anybody else want to chime in?
I'm seeing lots of deals from Malaysia, Kuala Lumpur especially, also still from Hong Kong. And I think this trend will continue to grow.
I'll tell you from my perspective, I've been to Asia several times this year. the companies right now that we're seeing, about 60% of the companies that have gone public so far come from Asia. Our business, I'd say most of it, a lot of it's being done now in Singapore, and most recently, Japan. The companies are much, much smaller right now compared to what we've used to see. And there's markets right now like Vietnam, which it's a complicated market, but I spoke at a conference there about a month and a half ago, and there was almost 1,500 people there, mostly private companies, all very small, but that's pretty much what we're seeing right now. The majority of the companies that I've seen that have gone public so far, at least from Asia, there's only 2 that I can think of that raised significant money, and the rest were pretty tiny deals. And I think there's basically 3 types of companies out there right now. If you're a company and you're making money and you have good cash reserves, then you're probably sitting on the fence. If you need money, then you're going to take whatever is offered to you. And if you don't, probably 6 months later, you'll get half. And the companies that we're seeing going public right now are companies raising $5, $10 million. I consider that friends and family money. They're willing to pay the cost of being public for a few years. And if they can execute their business plan and perhaps valuations improve and some of this uncertainty improves, then they're well positioned to do an A or B round and raise as much as they want. What jurisdictions, maybe David, this goes to you, are you seeing right now? I mean, we've always seen a lot of the Cayman Islands, for instance. What are the practical benefits of doing that? And why are people doing that?
I mean, Cayman Islands is definitely, I would say, and BVI, but mostly Cayman Islands. Cayman Islands is definitely number 1. As far as companies incorporating there, it's very friendly, especially to the management and board. You don't have to worry about activists like me over there. It's just very hard to do much as far as being in the Cayman Islands. But there's a ton of benefits from being in the Cayman Islands, and I'm actually in the process of buying one from there, and I'm very excited. It'll be my first NASDAQ deal where jurisdictions out of the Cayman Islands.
And if I can just add to that from the Cayman perspective, on the legal side, obviously, the risk of litigation that you mentioned is obviously quite a compelling reason for why we've seen a shift from Delaware through to Cayman in the last few years. 3 years ago, roughly half the SPACs incorporated were in Cayman. This year, 95% of the SPACs have been incorporated in Cayman, so a significant move to the jurisdiction. The other things I think that have contributed to that are obviously the recently introduced 1% excise tax, which doesn't have the same impact in the Cayman Islands, as well as the broader sort of tax neutrality of the jurisdiction. But David, as you said, it's very flexible, it's business friendly, people know what they're doing, the SEC knows what they're getting. There are risks we need to kind of deal with, and hopefully with competent counsel, you can manage that. But we're definitely seeing most roads lead to Cayman.
And just from a NASDAQ perspective, you can adopt Home Country Act law, so you could do issuances you could never do as a Delaware corporation. So Cayman Islands is really an awesome place to be incorporated.
Another reason on the financial reporting side, there's a little bit more leniency on the timing of when the financials go stale. It's within 9 months, so you have a longer period to get your document on file before you need to keep on updating it. So that's another benefit of being a FPI.
Okay. I mean, I think it's particularly relevant since a lot of the de-SPAC deals that you might be looking at are coming from Asia. Hopefully, we can try to give you insight into some of these areas. Now, moving on, perhaps, Natalie, more to your specialty, accounting and financial readiness. I mean, I could speak for hours on this, but what do you consider the most significant challenges, and what ultimately causes deals to derail?
So I think the main issue is they underestimate the timing of how much and how long things will take. They need to be more proactive. They got to get the team ready earlier. They got to get their financial advisor on board earlier. A lot of these foreign targets have never been audited before or have been audited in their local standards and have to be converted to either IFRS in accordance with the IASB or US GAAP. And all this takes time with an operating company because you have complexities in revenue, complex financial instruments, taxes. So I think the key is a lot of the companies do not know or underestimate how long it takes, and they really should start 6 months or more before even thinking of getting a working group together, starting their audit first, well, getting the books and records first, and then getting it audited, because that ultimately ends up being the delay at the end.
Yeah, from my perspective, I'm working mostly with the potential target side as opposed to the sponsor side, although I do some work with U.S. acquirers as well. From a potential target side, I think the worst case scenario is when companies come to me and they have a transaction going on. And yeah, of course, I can help and get you ready to go through an audit and get your SEC financials put together, but it's better to have that lead time. I think a better case scenario is when the existing shareholders in that target company already have the initiative set up to, hey, let's convert to proper accounting, IFRS or US GAAP, bring more sophistication to your systems, your processes, your controls, so that you're ready for an exit, de-SPAC or otherwise at that time. And the best case scenario is actually when companies come to me and they're very intrinsically motivated and internally motivated by the finance teams themselves that, hey, we want to have these best practices in place, and they're kind of driven from that perspective, but that's very hard to ingrain in a team if it's not naturally there. So a lot of that comes down to education as well, and what those teams understand. You kind of have to meet them where they're at. In Europe, there's a different level of understanding about what it means to be a public company in the US, and I think the work is often underestimated, as Natalie said. But you can't even go into a conversation and bring up the words, FPI, SOX, PCAOB. They don't know what that means a lot of times, especially with, I work with a lot of micro and small caps, where they have a very small finance team. So there's kind of a different level of understanding that you need to, bring to them as an advisor for what that process is going to entail.
To all of you, if you had to pick one aspect that companies tend to really underestimate, what would it be? Like gap conversion, the SEC involvement? Is there any one thing that you think companies consistently underestimate?
I can say as an investor, I see so many companies that want to go public, and they just don't have their audits in place. And really for them to get audited is going to be really hard because they didn't plan ahead. They didn't have sort of, the vision of, one day, they might have wanted, a thought of going public, but actually the books and records were never kept in such a fashion that would allow them to really go public and have audited financials. So I think it's hugely.
But you guys have been doing this for years, all of you. You probably got more than 100 years of experience between you. What's the reason that companies consistently misjudge this process?
I personally think that they underestimate it. They underestimate, the complexity and the compliance, and it's not a joke to be a public company. So you have to make sure you have all those, Sarbanes-Oxley, you have to be compliant.
I think it's the inexperience, and a major factor also is cost. It costs to be a public company, and to get the right auditor, the right advisor, the right attorney, all that costs. And if you either pay up front, and if you don't pay up front, you'll pay at the end, with all the delays. So the companies really should have a great team together that will advise them about their experience, like all of us over here, and know when what to tell them and train them and let them know, how to get it through to the finish line.
Let me add my 2 cents into this. For me, the most valuable component of this process actually are the internal accountants. My firm pretty much won't take on clients unless they can demonstrate that they have the ability to produce the information that we need. And most of these companies are very young, and they don't have that kind of expertise. And that's probably the most valuable thing that you can do before you get expensive lawyers and accountants involved. And again, I understand that 99% of this audience, we're service providers here. And when I speak to audiences of companies, trying to make everybody's life here easier, I explain to them that you actually have to do 4 things, and you can raise as much money as you want. As much. The number one thing you have to be able to do is explain to me the science behind your company. If you're a biotech company, then that's easy, produce the scientists and the studies. If you're an EV company, say, then show me what metrics of your company makes you special. Number 2, tell me how you can monetize this in a period where I can give my investors a return in a reasonable period of time. Number 3, which is the hardest part, which none of these companies can do the first 2 things in less than 10 minutes, because that's all the attention span that you're going to have. And that's something that they find incredibly difficult. I can spend an hour and a half with companies sometimes. I'm still not really clear on stuff. And the last thing, if you really want to close the loop, is have audited financial statements from an accounting firm that people know and trust so they know what they're dealing with. And if you can do those 4 things, you'll be able to raise as much money as you want. That's my 2 cents on that topic. Moving on into an area which I consider to be investor readiness and valuations, since that's the driver behind these transactions, the valuations. So, David, since you're the investor on this panel, what makes a cross-border target attractive?
A good valuation. And look,
Well,
obviously everyone wants to get the highest valuation, but
I know, but
You know,
in order
the-
to get that good valuation,
Yeah, you get-
that company has to be able to demonstrate something to you
Yes.
to increase your interest, like good corporate governance, solid accounting, right?
the very first thing I ask for is,
So what makes it attractive? What do you see that makes it attractive to you?
first and foremost, I ask to see the audited financials. And obviously, being that these investments are on Wall Street, we want to see stuff where the valuations are pretty high, where Wall Street doesn't necessarily know how to value these companies. So we're seeing, high valuations right now for nuclear energy. Very, very popular deals right now are crypto treasury deals. But from a valuation standpoint, obviously, we want a valuation where we can define by a recent round, obviously that bona fides the valuation that was done recently. And a fairness opinion is very important as well.
Natalie, valuations are a huge sticking point for SPACs. How are the managers reconciling this?
So with the valuations that we deal with, the accounting, it's related to either warrants or convertible notes. The companies have to get that in advance to make sure they're providing the proper assumptions, hiring the right valuation people in order to make sure that feeds into the financial statements.
Do you spend a lot of time going over those valuations?
Yes, we do. We have specialists internally that are valuation experts that go through the methodologies and the valuation assumptions in order to ensure that they're reasonable.
And I'm just curious, you're a large firm. How many of those valuations don't pass?
There's good practices to get on a call with the valuation expert from the company side and to talk to your auditor's valuation experts, and you agree on a mutual methodology before you steer the wrong way. So, good teams do that. They speak first about it, they go through the assumptions, and then there's a talking session back and forth. So if that is done in advance, it typically goes smooth. Where I see the issues is when they go and do, evaluation without communicating their approach, and then once it has to get reviewed internally, there might be some, follow-up questions and some differences in opinion that needs to be resolved. So again, I think key in a whole SPAC process is really communication. Communication and being proactive on all levels: attorneys, financial advisors, accountants, auditors.
All right, next question to all of you. If you had to give one piece of advice to a non-US company considering a SPAC merger, what would it be?
I can start.
I was going to start and say, once you have the team in place, I prefer and like having working group calls. I think that keeps you on track, keeps everyone held to deliverables, either if it's weekly or bi-weekly, depending on the time frame. But having a calendar in place and with everybody's responsibilities makes the SPAC process go smooth. And I've seen many of them that don't do that, and people are not communicating and things are missed, and they'll call you up and say, oh, we're filing tomorrow. Well, you told other people, but you didn't tell the rest of the group. So for me, working group calls are key.
Katrina?
Yeah, I think as soon as SPAC is even an option, they're usually pursuing multiple tracks. And so there are certain things you can do that are kind of no regrets decisions where even if you're not at the stage that you need to start a PCAOB audit or start writing up your SEC financials, you can at least, at a bare minimum, document what you're doing currently under your local accounting standards so that when advisors come in, it's a lot easier for them, and do other things like maybe start on an accounting conversion so that you're starting to set the stage kind of regardless of the direction that you're going to be successful and to have those best practices in place. And also to speak from the sponsor side of things and kind of back to your point on the investors, when I speak on the US side with US finance teams that know me as like the accounting conversion expert, they always want to ask me about the differences between IFRS, the international standards, and US GAAP, the US standards. And I point out to them that most companies I work with in Europe aren't even on IFRS because they're too small. They haven't had that level of sophistication yet that they've needed that. So they're mostly on, every European country, and I think a lot of Asian countries as well have their own local statutory GAAP that's based on the tax code. And so if you don't even understand kind of what your starting point is, that can become dangerous for what you're assessing. And even if you say, they've had audits in the past, maybe it's not consolidated across all of the entities. And even if you're getting statutory audits, you can get that for as cheap as like $10,000. So that kind of tells you something about the scope as compared to a proper, U.S. public company audit. So there's definitely a lot of uplift to kind of start it on.
David?
Yeah, I would say, the best advice is get on top of the accounting and the auditing as early as possible and hire the right professionals as early as possible.
Cynthia?
And this is particularly more nuanced from a Cayman legal perspective, but one thing we do often see, and it trips people up, is they see these entities as a bit of a flexible formality, for lack of a better word. The jurisdiction is often thought of as being incredibly business-friendly, as we said, but there are still some things that people need to be mindful of. So thinking of those entities, notwithstanding the flexibility, but as having robust internal controls, external controls, good governance, and that's a really key part to getting this right, doing deals right, and mitigating risk.
We have a little more than 5 minutes left, so I'll pose one more question to you, and maybe we'll have a couple of minutes to take questions. But when I began in the SPAC market, it was tiny, 2, 3, 4 billion, and then it ballooned to almost 150 billion or more. And it's calmed down somewhat since, but we see it picking up right now. So what's your forecast for the SPAC market? Is it going to be a good year, flat year, bad year? What are you seeing? David, why don't we just run down the line?
Sure. So.
All right, we got about 5 minutes left, so you can each take about a minute, and then I can close.
Absolutely, absolutely. So we're definitely coming off of some really good years where, the SPACs have really taken off. Unbelievable. As Drew was saying, I remember, 10 years ago, even longer, nobody knew what a SPAC was. Nobody knew, no one wanted to hear either. But now it's really, it's taken a life of its own. It's amazing to see. I think it will continue to be a strong vehicle in order to go public. Not a lot of companies want to go through IPOs. So I definitely feel that the SPAC has solidified itself as a great way of going public, and it will continue.
Katrina?
Yeah, I agree with that. I mean, I sometimes get myself a little bit too into the technical accounting details to see the macro picture. But I think that somebody on an earlier panel mentioned that it's great for kind of the emerging industries, EVs, crypto, et cetera. And I think that will continue to be true as well. And that's a lot of what I'm seeing in my pipeline as well as kind of new industries that I'm sorting out, like what are the accounting practices here, and getting really ahead of that from an audit readiness perspective, working with like cannabis seed companies, for example, which I think has just been made legal recently in the US to be able to list those. So some of that's coming out of the Netherlands for me right now, which is kind of interesting.
Natalie?
I think it's going to be a positive, good end of the year. Seeing uptick and seeing quality deals coming through, being more thoughtful, and additional new banks coming back into the market. So I think it's going to be a good deal.
I also think it's going to be a good year. I mean, we've seen a lot of volume on SPAC IPOs already. There's better quality management, sponsors, diligence processes, hopefully all leading towards better deal outcomes. And I think a lot of countries around the world and targets around the world, particularly we're seeing Asia, we spoke about Latin America, the Middle East, they're all seeing SPACs as a credible alternative to going public in the US. So hopefully, fingers crossed, we're heading in the right direction.
As you can see, I have an incredibly optimistic panel. I would say this about SPACs. I've been in this market for a long time, and I'm a big proponent of SPACs. I think it's a fantastic avenue for a company to become public. I almost look at it as a more perfect RTO, reverse merger, because you're actually getting paid a price certain. And I'm optimistic about SPACs because of actually the original name. Now, you can all learn something today, even though you're SPAC people. But I'm sure most of you in the audience remember that a SPAC used to be referred to as a blank check company, correct? Anybody know what it was referred to before that? Raise a hand. Anybody? Except Doug? Well, before blank check company, a SPAC was known as a poor man's IPO. I know I see you a lot of laughing back there, but my father was a school teacher. He never had a chance to buy an IPO share from Goldman. And I think it's that attractiveness that the average person can actually own a piece of an IPO is really pretty much the driver. Unfortunately, there's been a lot of abuse in the SPAC market, and it developed sort of a bad name for a while, as the RTOs did many years ago in 2008 through 10. But I don't believe the SPACs are going away. We're seeing more and more advancement of SPAC rules in places like Singapore and Hong Kong to try to eliminate some of the abuses. So I think it's a structure that's going to be around for a long time, and hopefully it'll be very useful to all of us. I thank you for your attention today and for attending, and have a blessed day. Thank you.
Thank you.
Thank you, everybody.